Hello traders and welcome to the In the Zone daily ACD recap for Friday, May 20th, 2016. In these recap videos, I go over the best ACD setups that occurred on this day, and these videos are intended to show you the types of trades the ACD method offers on a daily basis. I apologize for this not being up on Friday. I did a nice long video and went to produce it, and something went wrong, and it totally didn't work in the production of it. And so I had run out of time. I had other commitments that I had to do Friday night, and so I had to wait to redo the video. And so here I am Saturday morning doing Friday's video, and I apologize. But let's get into what happened yesterday on Friday. And one thing I want to talk to you about today is I want to teach you a new trade concept that you might be able to use going forward. And it has to do with pivot ranges. Now, when I first started trading the ACD method, of course, I applied the pivot range calculation to the day's action to give me the pivot range for the following day. And I did that for a very long time without realizing that, hey, you can use this pivot range calculation on different time frames and different lengths of time, and to calculate, whether you should be long or short. And one thing that I realized is that I can use the overnight time frame and take the high and the low from the overnight and then the close of the overnight and create a pivot range. And this gives you a good bias, probably a little bit more current bias going into the day. So what I want to do is I want to show you how I used that yesterday to get on board early. Now, like I said, I don't want these videos to be about my trading, but I just want to touch on this just a little bit. Let me bring up a different chart here. This is a 15-minute chart that I use, and what I'm looking at here is I'm looking at a couple of things. One is you'll notice the prior day. This blue line here is a prior day high. This blue line down here is a prior day low, and this lets me look at, are we opening in range or out of range? And then I've got these gray rectangles. These are the value areas, and they're TPO, not volume profile. And all I'm looking for is the direction of the value area. And so this is the value area. And then the yellow lines here are the overnight high and low. So this was the overnight high, this is the overnight low. And then these dotted green lines here, up here and here, these are projected targets, and they're based off of the overnight high and low also. The area I want to point to here is this area right here. This it's like a periwinkle color rectangle box. Okay, that is the pivot range from the overnight action. Okay, and we closed above this area, and so this pivot range should be support. And so this morning, knowing that this pivot range was support, as soon as we opened and we traded down into it, I got long to test this pivot range. I knew that if this pivot range, failed, then I was wrong and I'd have to get out. And so I'm getting in the market shortly after the market opens, and I'm not waiting for the opening range, and I'm not waiting for an A point. I'm banking on the fact that this is going to be support. And I have a couple of other things to look at. I've got my daily pivot range that our normal pivot range. It's also support today, and we're gapping up, and so we're above it. That's one thought to take into consideration. The next thought is the 3-day. Here's the 3-day pivot range down here, okay? And you can see that overnight we came down, we found support here, and we bounced, came down, found support, we bounced, came down here. This time it went into the pivot range, but found support at the 3-day pivot, bounced up, and notice every time it comes down here, it finds support, finds support, finds support, find support. So going into the open, we know that the 3-day pivot range is holding support. We know that the 1-day pivot range is support. However, we're gapping up. We're kind of far away from it. And then I've got this overnight pivot range that's also showing support. So with all of that support, I'm willing to take a shot, you know, because it's a low risk trade. Remember, you want that risk to be small. And I got long at like 43, realizing that at about 42 I'd be wrong. Okay, and so that's something I wanted to point out. Also, I'm going to show you something in just a minute too, but let's go back to this view here. I know that if they can push price below this pivot range and keep it there, then I'm going to be wrong. But this is a very small risk. Okay. Let me take you, one thing let me point out about the overnight pivot range is that you've got to give it a little bit more room than you would a normal pivot range. And that's because the open is so volatile. Okay. If you look back over here the day before, we had this overnight pivot range that was supposed to be resistance because we closed below it. However, the market opened up and ripped right through it and got to the other side. But then the very next bar turned down and was a huge down bar. So what this is telling you is that this, in essence, it acted as resistance. It just, what I call peekabooed above the pivot range and then rotated back down. As far as you trading this, you're going to have set your own parameters, for how much of this are you going to put a stop one tick above. I wouldn't. After using this for a while, I noticed that because the open is so volatile, that using a one tick stop above that pivot range, you're going to get stopped out a lot. But if you get the hang of it, you can use it and ask yourself, okay, is this holding as resistance, or is it, is it failing? And so in this case, I'll tell you, this was kind of tough. Closed above here, opened up, but then immediately sold off and got down below it. So this is, showing you that it can be volatile. All right. So as price opened here and then traded down into it, I got long here, realizing that if it got below here and could stay below here, I'm wrong, and it's a low risk trade. And so I got in early, and as price was pushing up, I added to my position and rode it all the way up to the A up point, at which point I got out and then reversed. Okay, so I'll get into that in just a second, but I wanted to point out to you that you can use the overnight high and low and the close and create a pivot range. Now, one thing that I do is that I do this about 10 or 15 minutes ahead of time, and I try to project what the closing price is going to be so that I can put some sort of rectangle on here, some sort of pivot range on here. And then I go and once the market opens, you have to act quick. You have to ask yourself, okay, where did we close? Let me put that actual closing price in, create the pivot range, and then I can adjust my rectangle here. Okay, so but this is a neat little way of asking yourself, based on the overnight action, what's the pivot range telling me from that action? Should I be leaning long or should I be leaning short? Okay. All right. And then one other pivot range that I want to talk about, and I'll get into it in just a second, but here's the 3-day that we just talked about, but here is the weekly pivot range. And you'll notice that as we're touching the A up, okay, in this area here, we're coming into this resistant weekly pivot range. So it's a good sign to fade the A, okay? And then this went on to confirm the A, but it couldn't move much higher because it's in this resistant pivot range. And the my projected target for the day was at, let me bring that back up here, was 56 and 29. 56 and a quarter was my projected high for the day. And so realizing that, along with the weekly pivot range, I knew that this thing, probably the highest this A up could go would be in the 59 area, okay? Because then you're getting to the top of the weekly pivot range. Okay, so hopefully you understand that these pivot ranges, you can look at, here's our 1 day pivot range right here, and we're gapping way up, okay? So we know that this is support. The 3 day pivot range was also support, and we were finding support off of it all night long in the overnight. Then we get our overnight pivot range that I created from the overnight high, low, and close. That's also telling me support. So we got those pivot ranges telling me support. However, we've got the weekly pivot range telling me that that area is resistance. And so trying to use these all in concert takes a little bit of getting used to, but that's something you'll have to develop, the skill set you'll have to develop to understand, okay, in the short term we're showing support, but in the long term there's still resistance above. Okay, so this morning we like I said, we opened, we put in our opening range, we have our A down, we have our A up, price comes up to the A up, it approaches this A up just in front of a number, okay, an economic number, and you can wait for the number to come out if you like, or you can short right away before the number. Whatever your risk parameters allow you to do, that's a personal decision there. But this offered a nice little three-point pullback off of fading the initial touch of the A up. And let me bring up the 1 minute chart here and show you. Okay, so on a fade the A, okay, you want to fade this number. You can get 1 or 2 ticks in front if you feel like it can't quite make it to the number, or you can just put your order there on the number, or you can wait to see how much it pushes through the number, try to get a little bit better fill, whatever. Okay. What I've done here is I've shown you that if you got short here at the A up, your stop, 11 tick stop, would be up here at 55. Okay, and you would, at that point, you've got a hard stop in. If it pushes 11 ticks past the A point, you're out. No questions asked. You get out. You're wrong. Okay. The next stop that you have is a time stop, and that is, price comes up here, but it doesn't take out your 11 tick stop, but it spends, 5 minutes, half the time of the opening range, above that A point. Now that A is confirmed, and that's your time stop. So you've got 2 stops. One is just a hard stop in case the market just blows right through it. The other is a time stop. You're waiting to see if they can confirm that A point. Okay. And I wanted to show you that even though this number came out right before an economic number, okay, and it's a bit scary, if you would have faded 52 1/4, okay, you would have got an immediate rejection off of that down to 49 1/4, okay, and that is 3 points. That's $150 per contract right there, and you can take off contracts, whatever your goals are, and I like to this white line here, 48.50, shows you the top of the opening range. One thing that you're going to find is that once it gets rejected here at the A point, its next line of support is going to be the top of the opening range, and that's because Fisher says that when you're above the opening range, you want to have a long bias. When you're below the bottom of the opening range, you want to have a short bias. So even though we're shorting this A up, you still have to realize that you're above the opening range and that it could find support here at the top of the opening range. And that's why my stop, my first targets are normally right around the top of the opening range. And this is a decision point. Now, if it can get rejected here and pushed down into the opening range, then it could potentially go to the opposite A. Now, the way to look at this is it's like a boxing match, okay? And you got a boxer who gets hit with a left jab and immediately hits the canvas, okay? You don't want him to get back up, okay? And that's what you want to look for with a good fade of the A. You want the price to come up here and get hit with a punch and not be able to get back up. You want to see it get rejected and just keep going in the opposite direction. If price is able to recover and turn back up and come back up to the A point again, then that's not the time to fade again. Okay, you don't want to fade again. Now, if you, let's say you shorted here at the A up and you took some off here, let's say you took some off at 2 points and you're holding some more position here in hopes that the market delivers that knockout punch and price just keeps on moving down towards the opposite A. Well, in this case, you got short. Where's your stop? Your stop's up here, 11 ticks, all right? And you've got your time stop, and price goes in your direction. You take some off, and you're still holding, okay? Price comes back up to the A point again, okay? At this point, you can either get out at break even if you like, or you can, there's no reason, you haven't confirmed the A yet, and you haven't taken out the 11 tick stop. So there's really no reason to get out other than you just want to, possibly control your risk. So here, if you're still holding position, you don't have to get out. Now, once these bars spent 5 minutes, you got 1, 2, 3, 4, and 5. Here, now the A is confirmed, and you got to get out. Okay, and one thing I want to show you is that this level up here, where this spent 5 minutes and this closed, is about the 53.75. So that's about a point and a half of risk. Okay, so that's only about $75 per contract. Okay, so you take your loss and now you're confirmed. Now you want to get long. Okay, you want to get long, but you don't have to get long right away. You can wait for a pullback. Now, I said a while back in that piece that I put out called Keep It Simple, is that when the A up is confirmed, you don't want to wait for too much of a pullback, because the A ups don't have as much of a pullback as the A downs do, okay? And that's just the nature of the ES. So you don't want to wait too long for bettering your entry price. But price comes down here, and you could have gotten filled here at the A up number, and then price did pull back this time on this day and gave you some heat. Okay, and so you just have to suffer through this heat, and if they close the bar back into the opening range, you're out. Okay, it didn't work. And so, but here it finally finds the support right here and pushes back up, and then it's able to get going. And you can see from this chart here that here's your pullback, and then it gets back to the A and then continues to push up. Now, when it pushes up here, there's a couple of things going on. One is you're approaching the midday hour. Okay, you're approaching lunch hour, and you're also inside the weekly pivot range. Remember that weekly pivot range was resistance, and I had a projected target of no more than 56.25. And so this was the time that chances are you want to be taking some profits here on your long, and maybe waiting to see how the market handles that weekly pivot range. Now, today this thing pulls back to the A point, spends some time here going sideways. This is all normal, okay? This is normal for an A up to go sideways during the lunch period. However, it gets weak and comes down here and closes back into the opening range. This is not a good sign, okay? This is, for me, that's a stop out, okay? Good A that's going to continue to go up, okay? A good A up that's going to continue to go up shouldn't close the bar back into the opening range. And I don't need to use the bottom of the opening range as my stop. That closing bar back into the open range is enough for me to tell me, okay, this is not going to be a typical good A up that's going to continue to climb all day, okay? And so this is a point where you would get out. And then once this happened, if you notice, it comes up to the A point and fails there and rolls over and gets back into the opening range. And then here, I'm thinking we're going to have a 0 macro score day closing back into, but they were able to push it back above the opening range and gave you a +2 score for the macro day. So this video is long, I know, I'm sorry. I'm trying to cover a lot of things here in this video, and hopefully this has been helpful to the best thing you can do with the ACD is to keep it simple. Fade the A, use your 11 tick stop, and then use your time stop. If it gets rejected and continues to move in your direction, then great. If it doesn't, you get out, and then if it confirms the A, then you switch your position and you go the other way. All the other things are extra, okay? Realizing where the 3-day pivot is, realizing where the weekly pivot is, the overnight pivot, all those types of things are added elements that take a while to get the hang of. But if you just keep it simple to the 4 lines of the top of the opening range, bottom of the opening range, A up, A down, keep it that simple, along with the pivot range, okay? Those things are, if you just keep it simple, it becomes easy to pick a small risk opportunity that has the potential to move a good distance in your favor. All right, guys, that's it. I've gone way too long here, and we'll talk at you later. See you later.